think we are. Yeah, we think we're live now. We are live. Good afternoon, everyone. Welcome to Black Buzz. It's me, KP. You have Miss Shay up there, ready to go on, ready to say her piece. Miss Tia from T-Kicks in the shoe customization business. So you got your shoes, she will customize it for you. All right. She's on social media, so you can hit her up Instagram. You can hit her up on YouTube now. Even on Facebook.
I still have to post those videos. They're coming. But I have my website and everything up, so I'll put it in the chat and the video.
All right.
Yeah.
And we have our special guest today, Miss Patricia Longmore. She is a real estate broker and a good friend, a mentor.
So old.
Yeah, well, you got me. Listen, mentors come in all ages now, eh?
True. I agree. Yes.
So we won't tell them that you're only 34, so that's all right.
I appreciate that.
So this is Black Buzz. And you know, we talk to individuals from the Black community who are doing things out there. You know, you may have a business, you're an entrepreneur, you're doing things in and for the community, man. And so what we do here on Mondays is to help our community to understand that part of society, or that segment of society, right? And you are in real estate, and we wanted to touch base with you to sort of ask you some questions, hear what you share some of your experiences with our audience, with our community, to see how we can be educated and do things differently, or do things in a way that will help us to come up a little bit, right?
All right. Fair enough.
So, welcome, Miss. How are you doing?
Thank you. I'm pretty good, thank you. I'm happy to be here. And I will share all I can as it relates to home ownership, and I want to say more pros than cons, but just ensure that we all have a piece of this earth, because as my friend would say, God not putting any more land on the earth, so we have to just get our piece of it right now.
Our piece of it.
Yeah.
Is this the first time you've done something like this via Zoom or technology or whatever the case is?
Kind of. So I did something similar in Jamaica for a development there. Yeah. Where we just talked about that development, but I've not done anything else here.
Okay.
Camera shy.
Okay, no worries. No worries. We comfy, man. We comfy. We're gonna laugh and have fun. All right. So talk to us now, Pat, in terms of how long have you been a real estate broker, or share some of your experiences and your background and things of that nature.
All right. So I've been in the real estate business, selling for 23 years. I've been a broker for the last 4 years. I was a real estate sales rep before, but I've been doing it for 23 years in total. So I started out part-time with Coldwell Banker for the first 2 years. And then after that, I went full-time with Remax. So I've been doing it from, as I told it, from I was 5. I don't think the math computed. No, you said I was 34. So I have to redo the math. But
no worries.
But it's I talk about it from two perspectives: from doing the business yourself and just having a home, because that's how I got into it. I bought a home, and then I realized, gosh, I could do this, and then I was telling everybody, hey, you can buy a house, and so I was just connecting people with the person I bought from, and And somebody said to me one day, why don't you do it yourself? You're so good at, connecting people. And then I just decided to check into it, and I did. And 1, 2, 3, I did the course, and then I started.
Okay.
So wasn't
Well,
planned. I was doing
that's
accounting
a good
before.
segue. That's a good segue, like in terms of what made you do it, and you say you
Yeah.
did a course and things of that nature. So talk on.
Right. Yeah, man. So that's it. I was fortunate enough to purchase a home and realize that it wasn't that prohibitive at all, the whole process.
Yeah.
And of course, when you get something that you think is good, you want to share it. And so, I
Yeah.
was encouraging other people to do likewise. And a friend just simply said to me, you should do this, and I looked it up and did the course.
What
Back
was the course
then,
called? What was the course called?
it's a real estate salesman course. And
Okay.
back then, sales course. And then back then it was like, I got the course done in 3 months. You
Yeah.
could do it then. Now it's a whole different thing. I mean, it takes a longer time,
Right.
but I know you're not doing it through the Ontario Real Estate Association anymore. You have to do it through the colleges. So it's a little bit different now. That all changed last year.
Mm-hmm.
But when I did it, your first phase was a correspondence course.
Yeah.
And then you did a second phase, which was like 2 weeks in class, or if it was just part-time, then you did it. It took about a month and a half. And so I started like in the June doing the correspondence, then started the phase 2 in September, and by December I was done, and January I was licensed to practice. So it was, pretty short course back then. But prior to that, it used to be like, it used to be like a 1-day course, but a lot has changed.
Okay.
So
Once you got the license now, like what were your steps, or what did you
right,
do?
so to get the license, you actually have to be employed by a brokerage.
Okay.
So first thing first is to go to a brokerage, and everybody wants you, because the more agents you have, the more money the brokerage will make, right? Because you sell and you pay a percentage of your commissions to the brokerage.
Right.
So that's the first thing. You get a brokerage to hire, and then they apply for your license, and then you can start. There's some training, but then you might want to join up with a team. A lot of people join up with teams, or you can just choose to go it on your own.
I was about to ask in terms of the team versus going it on your own, like how.
It has it. I mean, it's beneficial to both. It just depends on where. I kind of chose to do it on my own, because I realized in real estate you just really kind of have to make a name for yourself, and sometimes being a part of a team, as I say, it has its pros and cons, and just depends on where you are. In terms of what happened. Oh, sorry. So in terms of the affordability, your financial standing, that kind of stuff. So sometimes it might be best to join up with a team, because you're kind of guaranteed that you'll get some work from, especially if you have a strong leader in your team.
Yeah.
Other than that, then you're kind of fending for yourself, because it just doesn't come to you. You have to go out there, seek the business. A lot of agents start out by doing open houses where they get to meet people. They tell you, you want to reach out to friends and family first, just to get connected. I know my first sale was with our neighbor, and he was like, okay, I'm going to take a chance on you. And he gave me a condo to list for sale, and it was a good thing based on timing, that the market was, really good. So I sold it quickly enough, and then I could say, hey, I sold one, because people need to know that you've done something before.
That was your first sale?
That was the first sale I sold. Yes, I sold a condo.
Where was that? A condo where?
It was actually in Mississauga.
Okay.
So yeah, it was actually Mississauga. So that was the first one, and then how did the second one come along? So I'll tell you how the second one came along. I have a friend in Jamaica, and she had a friend that was moving here. She connected me with her. When she connected me with that friend, she told me, Pat, there are lots of people coming up from Jamaica who are going to be looking for, property here. So after finding her a place to rent, she said, why don't you advertise in the Jamaica Gleaner? And that's what I did. I put an ad in the Jamaica Gleaner saying, migrating to Canada, call the real estate expert, expert in quotations. Yeah. And I did that. And let me tell you something, I was inundated with emails and phone calls and everything, because there are so many people back then that were making that move as professionals, making that move here. And within a year, that's how the market for me just took off. So I was really, I had a bit of a niche market then, you know, because I was really just selling to a lot of people who were migrating here. And it
So
just went on from there.
as a real estate agent, you do more than just selling homes. You also
Of
yourself
course.
involved with rentals and these type of things.
Yes, I do. So you do both rentals, you do, so you have that opportunity to do not just residential, but commercial. I primarily do residential myself,
Mhm.
but you can do commercial leases, commercial sales, residential leases, residential sales.
Okay.
And some people take it further and actually do property management. I don't do that formally. Sometimes you end up doing a bit of that, especially when you have overseas investors who have bought here and then, you know, they need to just kind of keep an eye for them. But yeah.
Wait,
But yeah, it's a very rewarding job. Go ahead, Tia.
okay, so you know how like say if like lawyers they'll have like their firms and like in a building and stuff. So if you're a broker, do you have to have like a building where you like reside in order to like have agents like work for you?
Okay, so you can, there are many facets to a broker. Myself, I'm a broker, but I still work for Remax. I work in a firm. Myself, I don't have my own brokerage. I have one in Jamaica, but not here. But you can also be a broker within a broker. So you could be a Remax broker within a Remax brokerage, or you could just have your independent brokerage.
And then
So
you
the
have like,
choice is
can you have other agents like work under you even though
right. So if you're an independent broker, and you can actually have a firm set up, and you have agents working under you. You do need to have a broker of record. So you could choose to be the owner and the broker of record, or you could, if you don't have a brokerage license, so you could be a real estate salesperson and have a brokerage, but you must have a broker of record working for you.
Yeah.
But if you are a broker of record yourself, then you can just have people working under you. So it's a good thing. I mean, when you work in a brokerage, you have to, you're on a commission split. And it can be anywhere from a 50-50 up to a 95-5. Or some brokerages are offering you 100%, but you pay some additional fees. So you can choose. When you're your own brokerage, then you don't have to split your commission because you own the company, but it comes with a lot of responsibilities as well. You know, so you have a trust account that you have to manage. You have employees sort of that you have to manage. So you have to pretty much run the company. So it's a big responsibility to be a broker, African broker. So it's good.
All right. Oh, you have something else, Tia?
No, I was going to say it's a very rewarding career. I was going to say, add that to it, and for those who are just servicing the needs of clients, it can be very rewarding. Just having that ability to help someone get what for the average person is the most, probably the biggest investment they'll do. And as I say, for the average person, because for some other persons, they'll probably buy a yacht or something. But for the average person, buying a home is probably the most significant and maybe the largest purchase they'll make.
Good segue. Good segue, because one, I want you to hold the thought on because I'm going to ask you that question about how, what kind of encouragement, advice, and all that sort of stuff you give individuals wanting to get in. So, but you provided a segue now for us getting into, what it means to buy a home, rent. What are some of the things that we need to know? Sometimes, we don't even know what questions to ask. How do you even go about sort of getting familiar with what to do? In the Black community, we don't necessarily. I think we're doing much better now in Canada. Especially in Canada here. And from my experiences, from my own family background, we didn't necessarily start out with a house. We were renting for a very long time in various situations, right? And the whole idea of getting a house was like foreign. But we have friends that we went to school with and we grew up with, and some of them were from other cultures. And even if they were Black, we saw them as more affluent and well-to-do and all that. So it was sort of foreign to some of us, this whole idea of home. But for most of us, we are renting, whether it's an apartment or a basement or something like that. So talk to us now about the dynamics of all these things that I just threw out at you.
So as I mentioned before, it's your most significant purchase, right? And so you have to carefully plan for it. You can't just step into it without, thinking it through. So you kind of have to figure out what it is that you really want in a home, first of all. And then you have to also understand your financial situation. So you have
When
to
you say
understand.
what it is that you want in a home, what does that mean?
So there are different types of homes.
Right.
So you might, for most people, it's a starter home. And so
Yeah.
they're okay with it's just maybe a single person, a
Yeah.
couple. Then they
Yeah.
might be satisfied with maybe starting out with a condo,
Right.
apartment
Yeah.
or a townhouse. If you have a large family already, then you might have to look, at something that's a little bit bigger. And
Okay.
so you have to really look and see what it is that you really want. And
Yeah.
then, of course, what you want is one thing, what you can afford is another. So you really have to look at because we all want the mansion, right? But we have to
Yes.
look at our financial situation, making sure that we can afford what it is that we want.
You were so nice in saying that. You may want it, but can you afford it?
Right? So that is what, yeah. So yeah, and also look at your lifestyle needs,
Yeah.
because you might think that, okay, I want a bigger home. And so if I go further out in the country, I can get that home. It's more affordable for me, but then you have to look at your lifestyle. What if you're, say you're working downtown? You just you have to look at everything and kind of bring perspective to it. So
Yeah.
there are a few things that you have to think about. And before I get to what the first thing you need to do, you kind of also have to look at, think about like the upfront costs. And you
Right.
mentioned something earlier, KP, in terms of, you mentioned something about renting versus buying,
Yes.
because maybe buying is not for everyone. So
Right.
sometimes, I mean, we hope it would be, because it can't hurt to own, but sometimes it's just, you have to look at the pros and cons of renting, look at the pros and cons of buying.
Yeah.
And so as I segue into that, when it comes on to renting, for example, I don't know if you can think of any pros with renting, but I guess there are some. You have,
Keep it short.
I
That's
make it short, yeah. So we
yeah.
don't want to dwell on that, but there are a few things that are pros. So you have less maintenance issues to deal with.
Okay.
The monthly cost and the upfront cost is less, of
Yeah.
course.
Right.
You have a shorter term commitment, in terms
Okay.
of you can be out of the rent agreement maybe in a year.
Right.
If it ever happens, and it's not really happening lately, but say property values started to decrease, you don't have to deal with that. And then you can free up your cash flow as well. That's one thing, but those are a few pros. The cons, no, of course, sometimes the monthly costs can increase,
Yeah.
even though we do
Yeah.
have guidelines with the government that you have to stay within.
Yeah.
But there are also ways around that for a lot of landlords. When they realize that the prices are going up, they might choose to evict you, ask you to say that they might say they need the property, and then you have to find another place, and price might have gone up a lot, So that's it. There's always that risk that your lease might not be renewed, and then you have to start the process all over again. And then the worst part about it for me is the fact that you're paying someone else's mortgage when you could be paying your own, so that's a big con for me. Yeah. And of course, sometimes you feel like you want to make some changes, you can't just make a change to a rental property. You have to get and when I say changes, like decorative changes.
Decorative, right. Yeah.
The landlord's permission to do that,
Yeah.
Sometimes you're trying to make it your own while you have it, but it's not that easy. But with buying a home, of course, there are lots of pros. So first, you're paying your own mortgage, right? So there's always a possibility of increasing your equity in the home, right?
When you say increasing equity,
the equity. So you buy the house at a particular price,
yeah.
And of course, over time, and in Canada, you will see that if you're following the market any at all, you will hear from time to time that the average home price has gone up, and and every year, right?
Yeah.
So
so I'm just
that's
asking you
you
to break
building
it down.
equity,
Yeah. So the
right?
general audience listening, they'll understand.
Right. So you bought a house for 200,000, and all of a sudden, 2 years later, it's now worth 400,000, and that is not really unheard of. I've seen prices go up even more in a shorter space of time. So that difference between what you say owe the bank and what your house is now valued is yours. Is the equity that you've gained on it.
Okay.
And so those are some of the things. I mean, there's stability and peace of mind knowing that it's yours. You can't be evicted.
Right.
And of course, as long as you keep your obligations to the financial institution that you have the mortgage with, then you're pretty good to go. Yeah.
Pay that mortgage.
Yeah. And another thing too, which is we're seeing more and more often these days, is that potential for income from your home, because there are those you can have a basement apartment with your home. You know, I know of clients who the income from their basement is covering their mortgage.
Right.
Which means that they're almost living, you know, mortgage free.
Mortgage
So
free.
it happens over time, but there's also that, you know, the possibility, and you just really, over time, increasing your net worth. So, you know, I mean, it's always important to get in and get in as soon as you can, because you're building up a safety net for your children, you know, and for yourself in terms of retirement and so on. So it's not good it's good to own a house, but it's even better to own a couple homes.
Okay.
You know?
How does one get into the market in a sense that, okay, so someone wants to get a house, they have less than $20,000 in savings. They work full time, they know how to do saving, and really they take care of themselves, but they really want to get into a home. What's the first step? What are they doing?
All right.
Before you answer, Pat,
okay.
So just to tag on to what Shernell was saying, I mean, just to take it a little bit further. So in terms of that first step that she's asking, do they touch base with a person like you? Do they just go walking on, you know, or driving around these new bills and get a whole bunch of information just to sort of acclimate yourself or be familiar with what that process is, you know? So if as much detail as possible, it's, you know, for just taking the fear out of this thing for individuals to understand this first step that Shernell is asking.
So it's nothing that you have to be fearful of, and there's so many ways. But of course, there's always kind of a better way, not necessarily the right way, but a better way to do it, because there are a lot of you have to understand the initial upfront costs. That is always important in understanding that. So and when I say upfront costs, I'm just not talking. We're talking about the down payment, your closing costs, and any other applicable taxes that might, you know, that might apply. So I would say the first thing you want to do is probably, for some people, they'll walk in and speak with their bank to see what they can qualify for. So the first thing you want to do is see how much you qualify for. Very often that's not I found in my career that's sometimes not the first step for a lot of people. The first step for a lot of people is getting connected with a realtor, a real estate salesperson. And because you'll invariably come across somebody who has bought, and usually you want to get referred to someone. You know, most people prefer that way than going online. I mean, everybody's tech savvy and they go online and find a broker and, you know, find a real estate salesperson. But very often we kind of want to get referred to someone. So you refer to a real estate salesperson, and that's what will happen next, is that they're going to refer you to either a mortgage specialist, or, you know, if you have already gone into your bank, but the first thing you want to do is get pre-qualified. So see what it is that your income, along with the type of your credit, which is a thing that we have to speak about because that's really important.
So that's what you mean by pre-qualified?
Pre-qualified. Okay. So what the banks are basically looking at is your credit, your credit history, your income. Those two things are the primary things that you want to look at. So it's sometimes, I mean, it's really important for us to take good care of our credit. So the credit, you know, make sure that you are meeting your obligations as it relates to, you know, all your expenses and any debt that you have, because that is going to factor in whether you can qualify for a home or not. So, and that's the thing, that's one of the things that you can't do anything about. And when I say can't do anything about, your credit is your credit. As it relates to your income, sometimes you might get a second job just to make sure that the amounts are there, you know, things like that. But if the credit has gone bad, then you just have to repair it and make sure that it is fine. So make sure first and foremost, you take good care of your credit. You make sure your credit history is your credit is intact. So that's one of the things. And the next thing, of course, is your income. And you can actually go online, and I know I said you want to meet up, you want to connect with a mortgage specialist or go into your bank, but you can actually go online and see what you can qualify for. There are lots of calculators online. The banks all have them, and they can basically say, okay, with this income and these expenses, what can I qualify for? So pre-qualifying is the first thing you want to do to see.
Sorry, just a second. So you're saying if somebody wants to know how much they qualify for without going to the bank, there are actual avenues online we can go on.
And it gives you a rough idea. Yes, there are.
Oh,
I think all the banks have a calculator, a mortgage calculator, so they can actually do a pre-qualify on there. Yeah. I have clients who call me without even going to the bank and already know what they can qualify for because they're, and what they say, an educated consumer is the best one. So they go online and do all that before, even connecting. So you can do that, but always good to have your hands held when necessary. So your real estate salesperson more than likely will have a mortgage specialist that they work with, that they can, speak to. So they typically will refer you, or for some people who just wanted, they have a good relationship with their bank and they can just go into the bank and get their pre-qualification done. Now, a pre-qualification is not a pre-approval. The pre-qualification is basically saying, okay, based on what you've told me with this income and your credit, you're good to go for X amount.
Right.
And that is different from actually being pre-approved for a mortgage. When you are really at that point where you're good and ready, the bank can actually pre-approve you. Typically, the pre-approvals are good for 90 to 120 days. And what that is basically saying is that we are pre-approved, we know that you can buy for this amount. If you buy within these 120 days, this rate, they'll give you an interest rate.
Right.
And this rate that we've given you will be good until such a time. Okay. Right? So if the rates go up, you're secure. You have that rate that they've given you. If the rates come down, you'll get the lower rate. So it's always good to get pre-approved because it holds the rate, especially in times when interest rates are fairly low. You want to hold on to it, and just in case there's somebody says the wrong thing and the whole market shifts and interest rates start to go up or something, then at least you're secure with your rates. So getting pre-qualified, then pre-approved, that's where you want to start.
Yeah.
And of course, as I said, you want to, understand where you want to be in terms of housing. So once you have
so that's location.
Right. And location, of course, is key in real estate, because buying in a good location can make a big difference.
Okay.
Do you guys have what people, because I hear about it a lot from my friends in the US, the unsellable houses as the ones where there has been a death or mass shooting or something like that? And how do you guys smooth that over to sell them?
Okay, so when it comes down to real estate, what they've always told us is that you have to be upfront and honest. So there's no smoothing it over per se, because you always have to disclose. You know how we say location?
Yeah.
Other thing is for the realtor, disclose. So we have clauses actually that agents will insert in agreement of purchase and sale to have the seller declare whether there was, to the best of their knowledge, any deaths, because there are some cultures that is a big thing for them. If somebody has died in the house, or there are some people who don't want to be near
a ghost
cemetery, that kind of stuff. So you have to pretty much disclose it. Another thing you have to disclose is grow ups. It was very popular. I don't know so much now that it's been legalized, but growing a grow up operation, growing marijuana in houses was a thing. Probably still is, but and people didn't people didn't want to be, you don't want to be buying a house where there was a grow up. Why? Especially if it has not been remediated, because it interferes with your heating system.
Okay.
I've been in houses that were grow up, and it's, first of all, typically they're stealing the electricity.
Yeah.
So everything is reconfigured, rewired, because apparently it needs a lot of heat to go, and you can't get it up.
I don't know anything about this.
You don't know about it. So yeah. So but you as a realtor, if you know that property was a grow up and you're listing the property, you have to disclose that, and that disclosure goes on forever. So if you were to sell that property, you have to disclose, the person who's buying it is aware. And if that person went to sell that property, that agent who sold it to them, saying that person is the same one listing it, they must also disclose. So you disclose that forever.
Yeah.
So sometimes you really have to stop and think twice before buying a grow up. You have issues with insurance, because there are some insurance companies that won't insure a property that was a grow-up, but you can remediate. You can always bring it back to its original state, you know. So it just depends. It just
So,
depends.
so
But
would
you
you,
have to disclose. So in terms of the smoothing over, we really have to disclose, you know, as much as we know.
so would you say those houses are harder to sell or?
Typically,
Okay.
they're typically when it comes down to the crops, yes. But in terms of having like a stigma, like you know, a death in the house, a death by natural cause is the average buyer will be okay with. And as I said, once again, it depends on culture as well.
Mhm.
But having had a murder in the house or anything like that, that might be present a problem because for some people, they murder happened fine, you know, no issue. But for others, it will be an issue, and there's always that stigma because everything gets reported in the news and it's there. You type in the address and it pops up, you know, that's such and such.
So continuing with your steps now, in
Right.
terms of, you know, you spoke about pre-approved and being approved, and you know, what about, okay, so what
But
is that money that you need to have? What are
all
all
right,
these different
so
fees and all, you know, all these
right,
different things that you know, the
right. So
details that go ahead.
basically what you need is your down payment
Yeah.
and your closing costs. And of course, your closing costs includes your some government fees, so land transfer tax, among others. Now, down payment can be as little as 5% down. And some people might say, no, it could be even zero down because some banks, or you'll see sometimes some mortgage specialists advertise zero down.
Yeah.
You know, so there was a time when zero down was a thing, and maybe about before 2008, you know, when we had that last crash, because the banks would actually give you 100% financing.
Mm-hmm.
Um, I don't think they're doing that so much anymore. And if you do get a what they call a cashback, then typically you're paying a higher interest rate. So
Yeah.
right now, interest rates are really very good. It's like a good time to buy in the sense that the rates are low.
So
Little
say
bit
that
more
again. It's a
difficult.
good time to buy right now.
It's
That's
a
what
good time, you know. For me, it's always a good time to buy.
yeah, yeah.
But yeah, it's because interest rates are really low. So I don't know if any of you have been in the market for renting a property. The rental prices have really skyrocketed in the last few years.
Mm-hmm.
And that's fueled by a number of things. If you're looking to rent a condo, for example, a lot of people were buying condos and using them for Airbnb.
Yeah.
Well, yeah, so
I was
then
gonna
the
ask you
person was
about that
looking for a
too.
long-term rent, couldn't get one because people only wanted short-term, you know, because that's where the money was. That's changing right now because the Airbnb thing, I think COVID has affected it adversely. So we find that a lot more condos are coming out on the market and they're sitting there, you know, because there's so many. But in terms of rental, that is.
Yeah.
So yeah, so you wanna, sorry, where was I? I just lost my train of thought. We're talking about
You know, you're talking about down payments and all these different.
down payments, right? So you want to get your, so as little as 5% down, so 5% of the purchase price of the home,
Yeah.
and this is up to 500,000.
Okay.
Over 500,000, you're going to pay 10% on the difference.
Yeah.
So you're buying a house for 600,000, for example, the 5% up to 500,000 will be 25,000, and then you're going to need another 10,000 on the remaining 100,000, right?
Mm-hmm.
So 10% of the 100,000 is another
Okay.
10,000. So with $35,000, you have your down payment on a $600,000 home. And then of course, then your closing costs. The banks will tell you, or the market special will tell you to estimate 2% for your closing costs. So you can always, it's
So
typically
what does that 35 go up to then?
what does it go up to?
Yeah. So in terms of no, I'm just trying to look at all the different things financially that you're talking about.
Right.
So when you use the percentage, people may not understand it. So you said the 5%. You gave the breakdown.
5% of the purchase price.
Yeah.
Right.
So the 2% is extra would be what? What is that covering and how much?
So that's covering your closing costs. Your land transfer tax
Yeah.
is the biggest percentage of that, the biggest portion of your closing costs.
Okay.
Now, if you're a first-time buyer
Mm-hmm.
anywhere in the world, and if you've never owned a home before,
Mm-hmm.
so this means that if you've never owned a home in Jamaica or anywhere else, you are entitled to a rebate up to a maximum of $4,000
Mm-hmm.
on your land transfer tax. So if your land transfer tax works out to be 5,000, you're only going to pay 1,000. because you'll get that rebate on closing as well. And you cannot have owned anywhere in the world a house. So as I said, that's the biggest portion. The average cost for your closing in terms of the legal fees and disbursements, it varies based on the lawyer that you're
So when you use the term closing fees, that's lawyer. That's what are
so your lawyer's fees and disbursements, your land transfer tax. You also pay the HST on if you're putting less than 20% down, it's considered a high ratio mortgage. And so there are fees attached to that, but that gets added to your mortgage. It's calculated and added to the mortgage amount, to the total that you're borrowing.
Right.
So there's that. But the HST on it is payable right away.
Right.
There are also other, and this is, I'm talking about like a resale now, because on a new home, the cost might be a little bit more.
Yeah.
Because there are other levies that you have to pay, the hookups for the hydro, all those things, the education levies. So those amounts are part of your closing costs as well. And that's, so that's when you're looking at a new and resale home. Those are some of the things. Now, there's also a consideration as to where you're buying. Because if you're buying in Toronto, then your closing costs are, call it doubled. Michelle knows that. So you'll find a lot of people are going outside of the Toronto area because the closing costs will be, a bit less on that. All right, so we're going through the stages. So you have your down payment. So now we're buying this house for 600,000. We have our 35,000. We estimate
for 35,000.
Right. But at least another $12,000 or so $1,000.
Okay, that's what I was saying. So
so 2%. Estimating 2%. It could be less, right?
Okay.
You have your closing costs. So now you have your pre-approval and you're ready to go out and start looking because the money's is there. So then you start your search and you have the services of a real estate sales rep or a real estate broker to now assist you with finding. So you've narrowed down the area that you want to be in and you know that you can afford this area. And basically you begin your search. The minute you find something that you figure this would suit you based on, everything, you're also paying attention if you have children to the schools in the area, just transportation means, things like that. So your real estate sales rep would really help to guide you. Of course, it helps that you sometimes do your, own homework as well as it relates to where you're going. But once you've done that, then you decide to put an offer in, we call it. So you're gonna do what is called an agreement of purchase and sale. The real estate person will actually prepare that agreement for you. It's a little bit different in other places. I know in Jamaica, for example, when you find a property there, basically the real estate agent just kind of brings buyer and seller together. It's the lawyer there that puts the agreement, in place, the agreement of purchase and sale in place. But here we do it all. So we actually put the agreement together. So you decide on the price that you're that's probably the first thing you think about is the price that I'm gonna offer. And usually the realtor will help you the real estate sales rep will help you to decide on the price based on comparables. So what else has sold in the neighborhood that's somewhat similar to the property that you're looking at. Okay. So they can provide that information to you because we have, on our Toronto Real Estate Board, we can actually go back and see previous sales. And so you can really make an informed, decision on the price that you're gonna put forward. On your agreement of purchase and sale, so you have the price that you've decided, you put a deposit with your offer, and this is just basically saying, I'm serious about this purchase. So it varies. I mean, we were taught that it really didn't matter how much you're putting down. You could put down $1,000 because that's not what makes you the agreement binding. Is really that meeting of the minds, agreeing on all the conditions and signing to that seal. But it's because of competition, it's becoming more and more commonplace for agents to even be telling you in the listing that we need 5% deposit. I've seen that so many times, but I'd say on average, if you're looking at, and sometimes it's based on the price point. So you're looking at $300,000 property, you know, clearly this is going to be up north somewhere. So
Yeah, I was about to say, where?
yeah, you might say, okay, you could put $5,000 with the offer. And people in that area, you know, are accustomed to getting that. You come down to somewhere like Oakville and the property is, say, 600,000, if you can find that. They might be asking you for 30,000 down, or, you know, sometimes more than the deposit you're going to, you know, your down payment. But this is where your agent will guide you. So your offers consists of your price, the purchaser's, your names, you know, the seller's names, and you'll put the deposit that you're going to put in. And then the meat of it now are the conditions that you're going to insert in your offer, you know. So typically, there are two major conditions that we want to put in an offer. It's the condition on you getting your financing. So even though you're pre-approved, sometimes if you're high ratio, meaning you're putting less than 20% down, it then has to go through one of the insurers, right? So you have Canada Guarantee, you have Genworth and CMHC. You probably will be familiar with CMHC because they seem to be out there. But it's the same thing that they do, they insure the mortgages for the banks. So you want to put these clauses in because typically when you get a pre-approval, you don't have CMHC approval because you have to have a property to get that CMHC approval on that property, right? So you still require some time for the banks to process and send out to CMHC or whichever insurer it is. And once you get that CMHC or that insurer stamp of approval, then you have an approved, you know, approved mortgage. We typically put the standard clause gives you 5 days for financing, 5 banking days. And so we typically put another clause in, which is a condition on home inspection.
Okay.
Right. So that's always advisable because just looking at the house, you don't know what lurks beyond, you know, behind the walls or the electrical or the plumbing. Right. And so you hire a home inspector. Right. It's typically at the buyer's cost.
Okay.
To pay for that. And it can range from, I would say on average, about $450 plus HST. It could be more. Some inspectors will charge based on the size of the property. But, you know, on average, I'd say about $450 plus taxes. And that's your cost. So that's something else you have to factor in your checklist of costs that you'll incur.
Add that to the 12.
Right. But typically, I've been in a situation where the seller's agent said that no, they were willing to pay for the inspection. Okay. But that happens. And especially when we have competition, sometimes in order to get a firm offer, meaning that there are no conditions in it, sellers will do a home inspection prior to the present, you know, offer presentation time. So you have it there and they'll actually give it to you. So you can, right. So that way you can make a decision, you know, kind of on the spot. When they have the offers.
One more question.
Okay.
Repo housing.
Sorry?
Repossessed houses.
Okay.
How does one, because I know there are some people who are unable to, and then you walk through certain neighborhoods and you realize the house is collecting moss or grass. How does one get, because I have a few friends and they tend to stay away from discussing repo houses. They prefer, oh no, look at a new one, when you're like, no, but that's empty. How does one get involved in that? Because
all right, so
there.
So there are some people who have actually good connections with the banks and they can let them know the houses that have gone for sale. So the banks have repossessed the house or in the process of doing it. Even when so that's one way. You just really have to have a connection with the bank. But they are also listed on the MLS. So you can see if it's a power sale because you'll see that the property is listed by the bank. So, you know, you can go after it there. I've always heard these things about people who can get, they can get all the repo houses. I don't have that. I don't have that connection in getting them, but they're online. One client told me that, you know, she saw an agent with all these, a list of repo houses that are going power sale. So it's out there. Sometimes we have to be cautious with looking even at houses that have gone power sale, because it used to be that, and I think it's in the States, it's a bit like that, where if there's a house that is being repossessed by the bank, say for example, they owe $200,000 on the bank.
Yeah.
the thinking is that the bank just wants to get what is outstanding to them. And so if the house is really valued at 300,000 now, you're going to get a deal because you'll get it for just the amount outstanding to the bank. I know here in Canada, that's not entirely true how you look at it, because the banks have a responsibility to list the house at fair market value.
Okay.
And so what happens in a case like that, if the house is worth 500,000, the person owes 300,000 on the house, they have to list it at 500,000. And after they've covered all their expenses, so what is outstanding to them, and covered all the legal fees, because there'll be a lot of legal fees that are borne by the previous owner, then what is left is returned to the owner, the previous owner. So they actually get that money back. So you really the house should be listed at fair market value, not at the reduced value. It might be at a reduced value because you know what typically happens. You can't maintain the mortgage, other things run down. And there's the other side where you're losing your house to the bank. I've seen situations where the current owner who's losing the house, they destroy it because they figure, I'm not getting it, nobody's, So sometimes the bank has to go in and probably do some renovations and so on to bring it up. But typically it can be a good thing. And another thing too is that when the house is priced, less than it should, everybody's going after it, right? Just like we're seeing in this market where we have a lot of houses being underpriced, and then we have offer date set, then you have 50, 40 people going after that one house. What happens is that end up paying a lot more because
it drives it back.
It drives it up. So it's just that when you have more demand on it than the supply is there, then it pushes up the price. So it can be a good thing, but you just have to look at it carefully and make sure you're getting good value for what is being offered.
Okay. So
you bought a house, or?
you bought. So you've taken a lot of the unknowns and the mystery out of it with all those different costs. So now we're beyond the 3:00 portion, right? Because we normally go for an hour. But give us because we're gonna throw a couple more questions at you. But so what? We're in the house now. Is that where we are?
Okay, so we put in an offer.
Yeah.
And yippee, our offer is accepted.
Yeah.
So we're not having the crazy market that we're having right now, where there's competition all around. But once you get your offer accepted, then the next step, of course, is to fulfill your conditions. So remember, we had the 2 conditions, and not to say that there can't be other conditions.
Right.
Because if you're buying a condo, a townhouse or apartment, for example, then you're also going to want to include a condition that allows you to get the financial standings of the corporation, right? So what we call a status certificate, we'll ask for that as well. And usually that's a cost typically it's a cost to the seller. But of course, things happen. I've seen situations where the seller, the agent said they weren't paying for the status certificate, so you, the buyer, had to pay for it. So I guess there are some things written in stone, and then there are variations to other things. But you would also include that clause. But typically speaking, on a freehold, and a freehold meaning that there are no condominium fees, then conditional financing, conditional home inspection, and typically we do 5 days. When you're in competition, sometimes you take it down to a couple of days, enough time where the bank will be able to respond to you.
Right.
And so say those conditions are fulfilled. Say you get your offer done, you send a copy of your agreement of purchase and sale, as well as a copy of the listing of the property off to your bank or your mortgage specialist. They would have had your information before in terms of employment and all that with your pre-approval. And so they send that off to the bank, and then to CMHC, you get a response saying you're approved. Then you can waive that condition. So, and basically to waive that condition, you're signing a document saying that you hereby waive it, or that the condition has been fulfilled in the form of a notice of fulfillment. And same thing for your inspection. Your realtor will more than likely have inspectors they can refer you to.
Right.
Yeah, so you hire the inspector to go inspect the house thoroughly for you. They sometimes come back with issues. In a home inspection, we're typically looking for issues that are we're not looking for small things like a burn on the countertop or so on. You're looking for structural defects.
Okay. Okay.
Not to say that agents can't come back to you with all kind of other things, but you just have to, I guess it's a balancing act, and both buyer and seller have to agree that they will remedy what's been determined as an issue, or the price of the property can be adjusted. I personally prefer to have an adjustment in the price, because if it is that you say, for example, there's a crack in a basement wall or floor, and you agree that, okay, this has to be remedied, just adjust for the price of fixing it, is what I find works best, because if you leave it up to the homeowner to fix prior to you taking possession, they can do it any old way and it might not be done properly. So
okay,
adjust for the price and get it done yourself, so you know it's done properly. Other things might be worth, sellers might decide that they can take care of, but typically just adjust the price. And so you've done that, you waive the condition on your financing, you waive the condition on your home inspection, because agree that, you're both on the same page. You have a firm offer once you've waived those. So you've bought a house, there's no turning back. You could have turned back during that 5-day period, but no, it's yours. And you just have to close when the time comes. Yeah. So by closing, we mean that you're going to have the balance of your purchase price, because typically you put a portion of the amount as your deposit. And so in the case of the $600,000 home, you might have put $10,000 with your offer, which means that you still have $25,000 more to complete the sale, plus your closing costs. And that's what another thing is that once you've agreed on the property you're going with, and you have a full commitment on with the financing, you also want to enlist the services of a lawyer. Because the lawyer who's the one who will work on the conveyance and the closing of the deal. It doesn't hurt to have the lawyer look at your agreement of purchase and sale prior to, finalizing it. The clauses are pretty standard especially on a resale home. On a new home, for sure, you want your lawyer to look it through before you sign on the dotted line. And so the lawyer will take it through the closing process, and along come closing days, there are a few things that you have to also bear in mind. And so these are other parts of your costs, because you have to think about the fact that you are going to be moving. And so what are the moving costs involved? You have to think about insurance, because you have to insure the property before the bank will even fund the mortgage. You have to ensure that you have property insurance. This is on a freehold home, of course. What else you need to do? So your insurance, the banks will also sell you mortgage life insurance. That's another consideration. It's not mandatory, but something you can consider. As a couple, you buy a property, God forbid something happens to one, then the property could be paid off, depending on how it's set up.
Okay.
But it's not a prohibitive process. It can be a 1, 2, 3, if you plan properly. So it's something that we all should.
You need good credit, and you need some change. You need good credit.
Some money, and you need good credit and some.
You need good credit. You need some change, and you need to know where you want to go.
Okay, those three.
It helps to know where you want to go.
Yeah.
Right, because you might want to go where the price is not. It's not affordable, so you need to at least have an idea.
Place don't match your money, or your money don't match the place.
Have the champagne. Money for the champagne.
So once you have this place now, and you're in it, in terms of how can this house, aside from saying you have a house, I'll just throw this one out there, and then we'll end soon. Utilizing the house now in terms of equity and all that, so doing something with what's the equity in the house, maybe getting something out. Like, how does that work?
And that's why it's also good to have a good financial planner, when it comes on to like investments and so on, because there's so many things you can do. You have to understand that there are ongoing costs, because you have the house now. Understand what your ongoing costs are. So your mortgage, make sure that your mortgage is taken care of. And as I mentioned to you, the property taxes, for condos, there's condominium fees that have to be paid. And you also have to factor in like major repair costs, because down the line, of course, in time your house You might need a new roof, you might need to replace windows. These are big ticket items, especially windows, they're pretty expensive. So you always have to prepare for that. So make sure you're financially stable where that is concerned. Time goes on and your property is appreciating in value. You get into the house 2 years later, your neighbor is selling, you found out the neighbor sold for 200,000 more than you bought for. Then you realize, wow, I have all this, because I'm equity in my house. Some people might decide, okay, they want to sell and recoup that and get something larger. Some people might just want to take some money against their house and get another property. I always encourage that. I think it's such a good thing to own real estate, because I remember when we were, and this is 20 something years ago, and I was doing the course, I remember one of our instructors always said, and I'm not knocking investments like mutual funds and all that, but
Right.
I remember him saying you can't live in a mutual fund, so you always need a house to live in. So once you have property, you can always rent it out. Have somebody else pay that mortgage for you. When you're thinking about your retirement, it will be paid off. Sometimes you're thinking about, even you have a young family, children have to go to school. Sometimes people have to, other than say going OSAP or so on, and you want to just really do it for yourself. Sometimes people have to just dip into their, get a line of credit against their property because they feel like this is a better way to utilize the funds.
Yeah.
But I always think the money sitting there sometimes isn't doing anything for you. You have 100,000, 200,000 equity in your house and it's just there. What's the worst that can happen? The market can turn and then you lose that value. So if it is all possible and you still can meet your financial obligations and you're in a position to take equity from your home, buy another home, I think it's a good thing to do. Not everybody agrees with that, but I've seen it work for so many of my clients. And so they've taken money off the house, bought another property. If they buy a new one, sometimes by the time it's built, it has appreciated in value already too. And you can keep doing it. So it's just a really good thing to own your own property. And as Black people, I mean, we should all, as I said, God not making any more land, we should all have a piece of it. So so we should really strive to own our home.
All right. One question here that I got here is from one person who's supposed to be here, but he sent a question in. What do you enjoy the most about your job?
Satisfaction I get from assisting someone into owning their own home.
Okay.
I do. I mean, other than the fact that I just love looking at homes. So I would drive to Timbuktu to show homes because I just love, looking at homes. So I actually enjoy it. And I would encourage anyone out there who think they might have the patience, because you really have to have patience sometimes. You will come across the odd client that really just wants a drive.
That patience.
Right. So I remember experiencing that in the earlier days where people just, were just like, okay, Pat, when you come in, they just want to look and not making a decision. So you have to also, as a realtor, just qualify your clients, make sure that, they are serious buyers.
All right, Miss Patricia Longmore, real estate broker. You made me feel a lot better now. I'm not afraid. I'm not scared. Whether it's to get the home for the first time, or how to utilize equity in my home. I can even throw around the words like that.
Okay. And another thing I must mention to there, for some people, what is daunting for them is coming up with that initial deposit to put down on a home. There are a number of first-time home buyers programs. You might think, and I'm not a financial planner or anything, but you might even look at the government has a few programs where they will assist you with down payment. You can also look at RSP. Sometimes you can put money into your RSP. You can get a loan to buy RSP, and then within 90 days, you can actually, they'll allow you to use that money without penalty towards buying a home. So you might want to talk to your financial advisor on how to utilize those programs. But there are avenues.
I guess coming up with the funds has to be combined with what you're talking, the information gathering here.
Right.
How can I get, where can I go? What can I do? Maybe maybe government has a program I can tap into, all of these different things. Okay. All right. Is anything else, Shay, Tia, that you guys want to ask or
No, because if I start, she'll be here all evening. So we need to get her back. I have a lot more questions.
Okay.
A
Yeah.
Well,
lot.
you have the email address and my phone number.
Is
KP,
it
you can give that out too and just call. Um, and of course, there are lots of realtors of color. And so I know KP's, the whole idea of this is to really support those. And we have a lot in our churches. I
yeah.
can tell you there are quite a few in my church. I can name them. I know others in other churches. We need to just support them. Support
I'm
them
gonna
more.
I'm gonna send Tia your phone number here so that and you're okay with this being out there.
Absolutely. It's out there.
Okay.
I have a lot of questions. I'm very, very
Yeah.
interested.
Patty, you're very busy, I mean, can we do a follow-up with you? I mean,
Absolutely. Just tell me when. Give me. Daytime is good. Evenings are bad.
Okay.
Mhm.
Sorry, I'm just trying to send this in here so that folks can all right, there it is, T. So you can put that up there, your phone number
And
and your email.
right. And
Go ahead.
depending on where you are, because I know as much as I live in Mississauga, I do a lot in the East End. I'm always in Durham, Markham area.
Right.
But I definitely can even connect you with some of our own, church folks who are like stationed over this side. I can tell you, I can give you the names of agents that are, I know I have a good friend in Mississauga Church, and then there are others around that I know. I probably know about 6 other agents within our church. I don't know them all, but the whole idea is just to, support the agents.
Okay. All right. So what we'll do is that we're gonna get you back on here, and we'll talk a little bit more about this whole um idea of getting a home and all the different dynamics that goes into it. All right. But we really appreciate you being here today. Um, you did Tia a lot of good.
All right. I need to talk to Tia off the air as it relates to the show, but
Yeah,
it's
no worries. You
so
don't
just
have to
connect
sign
me
up.
with it.
Yeah, you don't have to sign up. I'm just gonna sign off Facebook here, and then we can talk.
Oh, okay.
All
All
right.
right. Okay.
Okay,
Thanks
folks.
again for yes,
Yeah, man.
thank you so much for having me. And
No
it was just a
worries.
pleasure doing this.
We
Not
were
a
happy to
problem.
have you.
We'll be back
Okay, thank you.
next week. Again, you may see Miss Longmore or someone else, depending on what her schedule is. All right.
If not myself, then I can definitely connect you with one of the other agents from our church.
All right. No problem.